Okay, guys, this week we are still talking about buying businesses, and we're specifically talking about banks and financing a business, because we all know that, it's very rare that people will have hundreds of thousands of dollars of cash lying around ready to pay cash for a business. So, Kingsley, what are our options and what do banks need?
Yeah, well, again, as we've talked about, they'll want to see due diligence and things. And in terms of when they're analysing the numbers, not surprising, because their focus is going to be, will you be able to pay our loan back? So they will look at those same profit and losses that we've talked about. They will typically do some so-called add backs on things. So like a classic would be depreciation. So again, we've got a business that sort of says it makes $100,000 profit, but that's after they took off $50,000 depreciation, for argument's sake. Probably the bank will let you sort of add that back to say, well, you've really got $150,000 to work with here to help pay our loan back, and they may do that on a few other smaller items. And the other owner might have been trying to slip a bit of private stuff through or whatever, and you can do some of these add backs. Then they are going to do very similar sums to what you should do yourself, really, but in terms of, well, okay, we're going to give you a loan over, let's say, 10 years, 15 years, this interest rate, so the monthly repayments are going to be X. Can this business make those monthly repayments, and these people can live and function and so forth, pay their tax bills, and see if those sums work out? So that will be the serviceability part, will be a big focus, as you'd expect, of their investigation into it. And then, of course, the trickier part, the bit that I suppose people on my side, the accountant and the client, is sort of then it's the security part, which we can sometimes get a bit of friction with the banks, where, of course, they want to make the loan as safe as they can possibly make it. So, of course, they are going to want to have it so that you've put your house on the line and personal guarantees and all these various things. And to some degree, of course, the banks have sort of got you a little bit in the sense that, it is, well, if you want our money, these are the, it's borderline take it or leave it. It's the only time, in a sense, you get possibly some bargaining power is, of course, you are in a fairly strong position and you're not looking to buy something that's really taking you to your limits. So you can say, well, hang on, bank manager A, if I walk up the road to bank manager B at another bank, he may well say, no, we don't need you to give us a personal guarantee. This is a safe enough loan that we would give it to you without that. But in many cases, particularly when someone's buying their first business, you probably aren't in that strong position. But to the extent that you are, you should make sure that you get those things. And in terms of guarantees and things, perhaps that they're time limited or those sorts of things. The other part that you might find you can work a bit to your advantage too, depending on what sort of business you're buying, but if you're buying a business that has quite a bit of equipment involved, then getting finance for equipment is generally easier. And also the good part is the equipment is usually enough to be the security for the loan. Much like you go to get your car loan as an individual person, that the car itself offers enough sort of safety to the financier that they don't say, well, we need to have your house and the this and the that and So equipment is a very advantageous thing to have involved if you're looking at buying a business. Of course, some businesses don't have a lot of equipment. If it's a service business, that may not really be there available to you. Banks will also, with some businesses, accounting is an example, some of the professions where they will lend just on the client basis and these sorts of things. So an accountant could sell a business to another accountant where they would lend, they would say, well, this client base is so reliable and stable that we will lend you money just on the strength of that, because we think if you muck it up, you'd be able to sell those fees to someone else. But not every business is that they're pretty picky in that. But again, if that is an option for what you're looking at buying, then, you'd be mad not to take that opportunity up. So explore that. But that's the main things that they want to be able to see on the numbers. It's highly likely you can live and pay your tax and all those things and pay their repayments pretty easily in the timeframes. And then obviously if the worst happens, that they're covered, many times over, ideally, of course, is what they want to be in a position of. So that's what you're up against. And of course, what you need to do then is put yourself in the mind of where they're coming from, so you can, in a sense, sell it to them as to how you can do it. The only other thing to say, the other tricky judgmenty thing with the banks is if the bank says no to your loan, that place, is that because this bank manager's not good at their job and I can go to another bank and get a yes? Or if the bank manager's saying no, should I be doing this? And obviously there's some situations which are in the first category where you've just unfortunately been dealing with a bank manager not very good at their job, and actually you should push on, versus there's quite a lot of them where, hang on, this is a pretty powerful signal coming through to me that perhaps I'm doing something I shouldn't be doing. And again, it probably comes back to people like me to give you that guidance to say, yeah, I think the bank manager's right and stop, no, you could do this safely and you should proceed and talk to a couple of other banks.
All right, fantastic. Well, this is the last video in our series of 3 of buying a business. I think the message that's come through loud and clear is really work those numbers, check what it is, and include your accountant in the process so that they can support you and be that guiding hand that you need in terms of those numbers, the financing and the rest of it. So thank you very much, Kingsley, for this very insightful series, and we hope to bring you another one coming soon.
Thanks, Lou.